Hey, it's Tyrone Jackson, the wealthy investor, coming at you with another hot educational video. Now, everybody and their grandmother wants to be really successful in the stock market, and I want you to be successful in the stock market too. So, what I love to give you is practical advice that you can use right now in this market to make money. All right, you ready for the biggest chip that you're going to receive in the stock market over the next 90 days? You ready? You have to think digital. You have to think digital. Stocks on Wall Street are being rewarded by institutional traders and investors as long as what? There's a digital component connected to their revenue stream. Let's take a look at a case here that I like, which is Coca-Cola. Now, I've been trading, as you know, for over 27 years, and I teach other people how to do the same. But here's the thing that the pattern that's sticking out to me most. This is Coca-Cola, member of the Dow Jones Industrial Average. Look at the stock's performance over the last 5 years. You know how I'm always teaching you to examine patterns and trends. And my number one saying, don't buy the stock if you don't understand the story. So what do? Major distributor of carbonated beverages and an array of beverages throughout the United States and around the world. About 5 years ago, it looks like the shares were trading about 39. Now, I don't care who you are, what stock you own. Every stock you own for the long term is going to have its share of volatility. And that's what you're seeing here on the chart, right? They look like mountains, peaks and valleys. But notice how this stock keeps peaking, selling off, retracement, peaking, selling off, retracement. But in 5 years, the stock has gone from about $39 to $54. Now, nobody else online except for me is going to tell you this. One of the reasons that this is not a $100 stock in this market is there's no digital component, meaning they can't sell directly to consumer online in mass quantities. Therefore, the revenue is not going to grow. Here's another company, Colgate Palmolive Company, ticker symbol CL. This is 5 years of this stock. Look at a lot of volatility, which means the traders are in it. But if you're in it for the stock to actually rise, you're not going to make a lot of money. Here's a peak down to 61. We'll call that, for argument's sake, the 5-year low. Lot of spikes in volatility. The stock isn't really rising. It's selling off, and then it's rising. It's selling off, and here we are at about $68. So 5 years ago, if the shares were around 61, after all that volatility, they've settled at where? $68.49. Let's call it that. Now, why is it that this company, which makes all these great products, hasn't seen their stock price go up 100% or more? There is no digital component. Listen to me, follow me. I'm going to show you step by step where the money is. Contrasting that to Estee Lauder, look at this. Because I call this company, I knew it was time to buy shares when it does what I call the $100 cross. Here we go. 5 years ago, these shares were trading at what? $71. $71 twice is $42. Have the shares over a 5-year period double? I'm always trying to expose you the stocks that have the greatest probability of going higher, that can double in 5 years because the story is strong here. The answer is they've more than doubled. From $71, they're resting comfortably at $207. These shares are going higher. It's a cosmetics company that has a portfolio of over 50 brands. And where are they focused on selling those brands? Online, direct to consumer around the world. It's not just Estee Lauder. I also recommended Netflix 5 years ago when it was trading at $63.11. Now, this is all digital, right? Remember, Netflix used to do what? Send you DVDs, you send them back, they flip to the digital model, and now they're able to sell their entertainment content all across the world. All right. So even though the stock peaked here at 411 and slammed down to 256, what happened is if you hold it over time, it will rise. Okay. So I'm showing you proof in black and white right now that if you're a trader or an investor in the stock market, and you want to have the greatest probability of doing well, you want to stick with stocks that have a digital story, like Estee Lauder, of course, Netflix. Netflix is number one in the digital space. In fact, if you go to their website, you don't even think about their brand anymore. It's just like, hey, sign up, you'll love it, right? So when we look at a pattern of the stock that has more than doubled in 5 years, Netflix, Estee Lauder, and brands whose stock don't double in 5 years, like Colgate Palmolive or Coca-Cola, a member of the Dow Jones Industrial Average. The reason is there's no compelling digital story. And when you're trading stocks, you're always trading them in the context. And the most powerful story going on in our marketplace right now is what? The digital story. Now, if you want to follow my recommendations and my trades, both cover calls and volatilities, hey, sashay on over to witradeschool.com and I will guide you through this digital universe that we are in right now, even as companies merge together. If you want to really, really get serious and start making some big money in the stock market, follow my trades here at WI Trade School. I think it'll help you a lot, and I'll acquaint you with the brands and answer your questions. But this is what I want you to remember from today's powerful, powerful, powerful lesson. Everything you do over the next year, you're going to have to, as a trader and an investor, think digital. That's where the money will be for the next 27 months.